Imagine waking up one day as one of the richest people on the entire planet. Your name appears on Forbes lists. Your wealth exceeds $30 billion. You own oil companies, mining operations, shipping fleets. You live in mansions. You drive the most expensive cars ever made. World leaders take your calls. The most powerful people on earth want to do business with you. You're untouchable. You're a god among men. Now imagine waking up just a few years later owing more money than most countries will ever see. Not just broke. Not just bankrupt. But owing $1 billion more than zero. Your assets are gone. Your companies have collapsed. Your reputation is destroyed. You're facing criminal charges. Former friends won't return your calls. The same people who praised you now mock you. You went from being worth $30 billion to negative $1 billion in less time than it takes most people to pay off a car loan. This isn't fiction. This isn't a movie script. This is the true story of Eike Batista, the Brazilian entrepreneur who achieved the impossible twice. First, he became one of the 7 richest people in the world. Then he became one of the most spectacular financial disasters in modern history. And the craziest part? Almost nobody saw it coming. But here's what makes this story absolutely fascinating. Eike didn't lose his fortune because of bad luck. He didn't lose it because of a market crash that affected everyone equally. He lost it because of something far more dangerous, far more seductive, and far more common than you might think. He lost it because he believed his own legend. And that belief cost him everything. Let's go back to the beginning because every empire has a foundation and Eike's foundation was actually pretty solid. He wasn't born into poverty. His father was a successful mining entrepreneur and former minister. But Eike wasn't content to just inherit wealth and live comfortably. That wasn't enough. From the moment he could think for himself, he wanted more. He wanted to be bigger than his father. Bigger than anyone else in Brazil. Bigger than almost anyone in the world. At 18 years old, while most teenagers are thinking about parties and video games, Eike dropped out of university and moved to Europe. He started trading gold and silver. Not investing carefully. Not studying markets for years before making a move. Just diving in headfirst with absolute confidence that he would succeed. And here's the thing that drives people crazy about this story. He did succeed. His early gold trading ventures made him millions. The confidence wasn't misplaced. At least not yet. By the time he was 23, Eike had made his first $8 million. Most people would take that money, invest it carefully, and live very comfortably for the rest of their lives. Not Eike. He saw that $8 million as seed money for something much bigger. He returned to Brazil in the early 1980s and looked around at what the country needed most. The answer was obvious. Infrastructure. Mining. Energy. Brazil was rich in natural resources but poor in the ability to extract and process them efficiently. So Eike started building. He founded companies with names that would become legendary in Brazil. Odebrecht, a gold trading company. Then he expanded into mining with ventures that would eventually become massive operations. But what made Eike different from other entrepreneurs wasn't just his ambition. It was his style. He didn't just want to build successful companies. He wanted everyone to know about them. He wanted his face on magazine covers. He wanted to be recognized everywhere he went. He wanted to be famous for being rich, not just rich. And that's exactly what happened. Throughout the 1990s and 2000s, Eike's empire grew. He sold some companies for enormous profits. He started new companies with the proceeds. He moved into sectors that traditionally required government support and made them profitable through private enterprise. By the mid-2000s, his main company, EBX Group, was a powerhouse with operations spanning multiple industries. Oil exploration, mining, energy, logistics, hospitality, entertainment. If it made money, Eike wanted a piece of it. But the real magic happened between 2010 and 2012. This was Eike's golden period. This was when everything he touched seemed to turn into gold. His oil company, OGX, was drilling in pre-salt oil fields off the Brazilian coast. The projections looked incredible. Billions of barrels of oil waiting to be extracted. The stock market went crazy. Investors poured money into OGX like it was printing free cash. The stock price soared. Eike's personal wealth soared with it. At the same time, his mining company MPX was expanding. His logistics company LLX was building ports. His energy company OSX was manufacturing ships and oil platforms. Everything was connected. Everything fed into everything else. It was a brilliant vertical integration strategy. The oil company needed ports, so the logistics company built them. The ports needed energy, so the energy company provided it. The ships needed maintenance, so the shipbuilding company handled it. On paper, it was genius. By March 2012, Eike Batista's net worth hit $30 billion. He was the seventh richest person on earth. In Brazil, he was a superstar. He gave interviews constantly. He appeared on television shows. He made bold predictions about the future. He promised he would become the richest man in the world, surpassing Carlos Slim and Bill Gates. And people believed him. Why wouldn't they? Everything he had predicted so far had come true. He said he would make billions, and he did. He said his companies would dominate their sectors, and they were. He seemed unstoppable. But there was a problem. Actually, there were several problems. And they were all hidden beneath the surface, invisible to almost everyone except a few skeptical analysts who were dismissed as pessimists and haters. Problem number 1. The oil wasn't there. Not in the quantities OGX had promised. The company had released wildly optimistic projections about how much oil they could extract from their fields. These projections were based on preliminary data, hopeful estimates, and the assumption that everything would go perfectly. In the real world, things never go perfectly. When OGX actually started drilling in earnest, they found far less oil than they had promised. Far less than they had told investors to expect. Far less than the stock price had been based on. Problem number 2. The companies were all drowning in debt. That brilliant vertical integration strategy required enormous amounts of capital. Building ports isn't cheap. Manufacturing ships isn't cheap. Oil exploration definitely isn't cheap. Eike had funded all of this expansion through debt. Massive amounts of debt. The assumption was that the oil revenue would come in and pay for everything. But if the oil wasn't there in the quantities promised, then the revenue wouldn't be there either. And if the revenue wasn't there, the debt couldn't be paid. Problem number 3. Eike's reputation for bold predictions was starting to work against him. Every time he promised something and failed to deliver, investors got more nervous. And he was failing to deliver more often. Oil production targets were missed. Port construction was delayed. Shipbuilding fell behind schedule. Each miss was small. Each delay was explainable. But they added up. And they made people start asking questions. Problem number 4, and this might be the most important one. Eike had believed his own hype. He surrounded himself with people who told him what he wanted to hear. He dismissed critics as jealous or ignorant. He doubled down on risky bets instead of pulling back and consolidating. When early warning signs appeared, he didn't see them as warnings. He saw them as temporary setbacks that his genius would overcome. This is how empires fall. Not suddenly but gradually, as the person at the top loses touch with reality. The collapse started in 2012, right after Eike reached his peak wealth. OGX announced that one of its main oil fields would produce far less than expected. The stock dropped. Investors got nervous. Then another field disappointed. The stock dropped more. Then the company admitted it didn't have enough cash to continue operations at the current pace. The stock crashed. And here's where it gets really interesting, because this is where we see how interconnected Eike's empire really was. When OGX struggled, it affected OSX, the shipbuilding company, because OGX was its main customer. When OSX struggled, it affected LLX, the logistics company, because OSX was supposed to use its ports. When LLX struggled, it affected MPX, the energy company, because LLX needed its power. It was like watching dominoes fall, except each domino was a multi-billion-dollar company. Throughout 2013, the situation got worse. Much worse. OGX couldn't pay its debts. It filed for bankruptcy protection, which at the time was the largest corporate bankruptcy in Brazilian history. The stock became worthless. Billions of dollars of market value simply vanished. Investors who had believed in Eike's vision lost everything they had put into his companies. But Eike didn't give up. He kept fighting. He kept promising that he would turn things around. He sold assets. He tried to renegotiate debts. He looked for new investors. He gave interviews insisting that the problems were temporary, that his company still had value, that he would rebuild. But nobody was listening anymore. The magic was gone. The credibility was destroyed. The emperor had no clothes, and everyone could finally see it. By 2014, Eike Batista's net worth had gone from $30 billion to negative $1 billion. Think about what that means. Most people will never have a net worth above a few $1,000,000 if they're lucky. Eike went from having more money than he could spend in 1,000 lifetimes to owing more money than most people will ever see in their entire existence. He didn't just go broke. He went so far into debt that even if he worked every single day for the rest of his life, he could never pay it back. His creditors came after him. Banks wanted their money. Bondholders wanted their money. Suppliers wanted their money. Everyone wanted their money, and there was no money left to give them. Eike's mansions were seized. His cars were seized. His yacht was seized. His helicopter was seized. Everything with value was taken to pay debts, and it still wasn't enough. Not even close. But the financial collapse wasn't the end of Ike's problems. It was just the beginning of a new nightmare. Brazilian prosecutors started investigating his companies. They wanted to know if the optimistic projections had been more than just honest mistakes. They wanted to know if investors had been deliberately misled. They wanted to know if financial crimes had been committed. In 2017, Ike was arrested. The charges included insider trading, market manipulation, and money laundering. The man who had once been photographed with presidents and celebrities was now being photographed in handcuffs. The man who had given inspiring speeches about entrepreneurship and success was now giving testimony in criminal court. The man who had been a symbol of Brazilian economic power was now a symbol of hubris and failure. He was eventually sentenced to 30 years in prison, though the sentence was later reduced and he was allowed to serve it under house arrest due to his age and health conditions. But the damage was done. His reputation was destroyed beyond repair. His name became a cautionary tale. Business schools started teaching about his rise and fall as a lesson in what not to do. So what can we learn from this story? What's the takeaway from watching someone go from 30 billion to negative 1 billion in just a few years? First lesson. Believing your own hype is dangerous. Ike surrounded himself with yes men. He dismissed critics. He assumed his past successes guaranteed future successes. This is a trap that catches many successful people. They start thinking they have a golden touch. They start thinking they can't fail. And that's exactly when they fail. Second lesson. Debt is a tool, but it's also a weapon that can turn against you. Ike's empire was built on borrowed money. When things went well, the debt magnified his gains. When things went poorly, the debt magnified his losses. The bigger the debt, the less room you have for error. And everyone makes errors eventually. Third lesson. Transparency matters. If Ike had been more honest about the challenges his companies faced, if he had admitted problems earlier, if he had managed expectations better, the collapse might have been less severe. Instead, he kept promising and under-delivering until nobody believed anything he said. Fourth lesson. Diversification isn't just about being in different sectors. It's about reducing interconnected risk. All of Ike's companies depended on each other. When one failed, they all failed. True diversification means your investments can survive independently. Fifth lesson, and maybe the most important one. Success isn't just about making money. It's about keeping it. It's about building something sustainable. It's about knowing when to consolidate rather than expand. Ike could have cashed out at any point and lived like a king for the rest of his life. Instead, he kept pushing, kept betting, kept expanding until there was nothing left. But here's the question that haunts everyone who studies this story. Could it happen again? Could another entrepreneur rise so high and fall so far? Could another person believe so strongly in their own vision that they ignore reality until it destroys them? The answer is yes. It happens all the time, just usually on a smaller scale. Tech startup founders who raise billions in funding and then watch their companies collapse when they can't deliver on impossible promises. Real estate investors who leverage themselves to the maximum and then lose everything when the market turns. Traders who have a few good years and convince themselves they've figured out the secret to guaranteed profits, right before they blow up their accounts. The story of Eike Batista is extreme in its numbers, but the psychology behind it is universal. It's the story of ambition turning into arrogance. It's the story of confidence becoming recklessness. It's the story of a man who thought he had beaten the system, only to discover that the system always wins eventually. Today, Ike lives in Brazil, keeping a much lower profile than during his glory days. He's older, presumably wiser, and definitely much poorer. He gives occasional interviews, though far less frequently than before. Sometimes he talks about his mistakes. Sometimes he blames others. Sometimes he hints at comebacks that never materialize. He's become a ghost of his former self, a reminder of what happens when you fly too close to the sun. But perhaps the saddest part of this story isn't the money. $30 billion is an abstract number. Most people can't really comprehend what that means. The saddest part is the transformation of a man who was genuinely talented and innovative into someone who will forever be remembered as a cautionary tale. Ike built real companies that created real jobs and provided real services. He had legitimate business acumen. But all of that is overshadowed by the spectacular nature of his fall. Think about how many decisions Ike made on his way up. Think about all the times he could have chosen differently. He could have been more conservative with projections. He could have taken on less debt. He could have diversified away from interconnected companies. He could have sold some of his shares when they were at their peak and secured his wealth. Any one of these decisions could have changed the outcome. But he didn't make those decisions. He made the opposite decisions every single time. And that's why we're telling this story. The truly fascinating thing about financial catastrophes is that they're almost never caused by a single mistake. They're caused by a series of mistakes that compound over time. Ike made his first mistake when he overpromised on oil reserves. But that mistake was survivable if he had admitted it quickly and adjusted. Instead, he made a second mistake by doubling down and taking on more debt. That was survivable too if he had cut costs and restructured. But he made a third mistake by refusing to acknowledge the severity of the problems. Each mistake made the next mistake more likely and more damaging. This is what psychologists call the sunk cost fallacy. Ike had invested so much money, so much time, so much reputation into his vision that admitting failure seemed impossible. So he kept going, kept investing, kept promising, even when the rational choice would have been to pull back and salvage what he could. He was trapped by his own success, unable to admit that success might be ending. There's also a cultural element to this story that's worth examining. In Brazil, Ike was more than just a rich businessman. He was a symbol of national pride. He represented the idea that Brazilians could compete with the world's elite. He showed that Brazilian entrepreneurship could build global companies. When he succeeded, Brazilians celebrated. And when he failed, it felt like a national disappointment. This added pressure probably made it even harder for him to admit problems and change course. The media played a role too. They built Ike up, celebrating every success, repeating every bold prediction. Then when things turned bad, they tore him down with equal enthusiasm. The same journalists who had written glowing profiles were now writing exposés about his failures. The same publications that had put him on their covers as a success story were now using those same covers to document his downfall. This is the nature of media coverage of the wealthy. You're either a hero or a villain with no middle ground. From an investment perspective, the Eike Batista story is a masterclass in what not to do. His companies were trading at valuations that assumed everything would go perfectly. The stock prices were based on projections, not on actual results. Investors were buying not the company as it was, but the company as Ike promised it would be. This is speculation, not investing. And speculation works great until it doesn't. When reality fell short of projections, even by a little bit, the entire valuation structure collapsed because there was no foundation of actual earnings to support it. Smart investors saw this coming. Some hedge funds actually shorted OGX stock, betting that the promises were too good to be true. They made fortunes while Ike lost his. This shows that the information was available. The warning signs were there. But most people didn't want to believe them because believing the dream was more exciting than facing reality. There's a particular moment in Ike's fall that really captures the entire tragedy. In 2013, as his empire was crumbling, he gave an interview where he was asked about his mistakes. He said, and this is a direct quote, "I made the mistake of believing in my own projects." Think about that statement. He's admitting that his downfall came from believing too strongly in his own vision. Not from external forces. Not from bad luck. But from his own excessive belief in what he was building. This is profound because it shows self-awareness, but it also shows how deeply rooted the problem was. Even in acknowledging the mistake, he's framing it as a problem of excess belief rather than fundamental errors in business strategy. It's like saying, "I crashed my car because I was driving too confidently," rather than, "I crashed my car because I was driving too fast and not paying attention to the road." The former sounds philosophical. The latter is just the truth. Looking at this story from a psychological perspective, Ike displayed many traits associated with what psychologists call narcissistic personality disorder. Not in the clinical diagnostic sense necessarily, but in the behavioral patterns. The grandiose sense of self-importance. The preoccupation with fantasies of unlimited success. The belief in being special and unique. The need for excessive admiration. The sense of entitlement. The exploitation of others. The lack of empathy. These aren't just character flaws. They're patterns that lead to specific types of decision-making, and those decisions led to specific outcomes. But we should be careful not to reduce this to simple psychology. Ike wasn't just a narcissist who got lucky and then unlucky. He was a genuinely skilled businessman who built real value in real companies. His early successes weren't flukes. He identified opportunities in the Brazilian market before others did. He executed on difficult projects. He created actual wealth, not just paper wealth. The tragedy is that he couldn't maintain that success because his personality drove him to take bigger and bigger risks in pursuit of validation rather than sustainable profit. One aspect of this story that doesn't get talked about enough is the impact on regular people. When OGX went bankrupt, thousands of employees lost their jobs. Suppliers lost money they were owed. Contractors had to write off unpaid invoices. Pension funds that had invested in OGX stock lost retirees' money. The ripple effects of Ike's collapse extended far beyond his personal fortune. Real families were hurt by this. Real people's lives were disrupted because one man's ambition exceeded his ability to deliver. This raises an ethical question that applies to all entrepreneurs and business leaders. At what point does the pursuit of personal success become irresponsible toward others? Ike took other people's money, investors, lenders, suppliers, and lost it pursuing his vision. He didn't force anyone to give him money. They made their own decisions. But he did make promises he couldn't keep. He did paint pictures of future success that turned out to be fantasies. Where's the line between optimistic entrepreneurship and reckless misleading of stakeholders? The legal system in Brazil tried to answer this question through Ike's criminal trial. The courts decided that he had crossed the line from legitimate business risk-taking into criminal market manipulation. But even if you disagree with that legal conclusion, you can still acknowledge that there's an ethical dimension to how entrepreneurs communicate about their company's prospects. Being confident is good. Being dishonest is not. The challenge is figuring out where confidence ends and dishonesty begins. What makes this story particularly relevant today is that we see similar patterns playing out in current business environments. Startup founders who raise enormous amounts of money based on growth projections that assume unlimited expansion. CEOs who promise revolutionary technologies that aren't actually ready. Investors who pour money into companies that have never been profitable and might never be profitable. The specific players change, but the pattern remains the same. Promise big, raise money based on the promise, hope to deliver before reality catches up, and often fail to do so. The difference is that most of these failures happen on a smaller scale and get less attention. When a tech startup that raised $50 million goes bankrupt, it makes news in business publications but doesn't become a global story. When Eike Batista went from $30 billion to -$1 billion, it became one of the most famous business disasters in history. But the underlying dynamics are the same. Overpromise, underdeliver, lose other people's money, face consequences. If you're reading this thinking, I would never make Ike's mistakes, you might be right. But you also might be wrong. Because Ike didn't think he was making mistakes at the time. He thought he was being visionary. He thought he was being ambitious. He thought he was being the kind of bold entrepreneur that changes the world. And maybe, in some parallel universe where the oil reserves were as large as he hoped and everything went according to plan, he would have been right. But we don't live in that universe. We live in this one, where reality has a way of not caring about our plans. The final lesson from Ike's story might be the most uncomfortable one. You can do everything right and still fail. But you can also do many things wrong and succeed for a while. Ike's early successes didn't prove he was a genius. They proved he was skilled and lucky. His later failures didn't prove he was incompetent. They proved he was human. The real insight is understanding that success and failure aren't permanent states. They're temporary conditions that can reverse based on decisions, circumstances, and luck. Eike Batista went from $30 billion to -$1 billion. That's a fall of $31 billion. To put that in perspective, if you lost $1,000 every single day, it would take you over 84,000 years to lose that much money. Ike did it in less than 3 years. That's not just a business failure. That's a historic catastrophe. That's the kind of loss that gets taught in business schools for generations. That's the kind of story that makes people question everything they thought they knew about wealth, success, and what it means to win in business. And yet, despite everything, Ike is still alive. He still wakes up every morning. He still goes about his day. He still exists in a world where everyone knows his story. That takes a particular kind of resilience or perhaps a particular kind of denial. Most people would be destroyed by that level of public failure. Ike somehow continues on, a living reminder that even the highest heights and lowest depths are just chapters in a larger story that continues until it ends. This is the story of the Brazilian who went from $30 billion to -$1 billion. This is the story of what happens when ambition becomes delusion. This is the story of how quickly everything can change. This is the story of Eike Batista, the man who had everything and lost more than everything. And this is the story that should make anyone with ambition pause and ask themselves the most important question in business. Not, how can I get rich, but what am I willing to risk to get there?